Three major banks in the United States have failed in a short period of time, and here's why. Hi everyone and welcome back to our channel where we discuss the latest news and help young entrepreneurs reach their potential. Today, we're going to be talking about the recent crash of Silicon Valley Bank, one of the largest banks in the United States. First of all, let's start with some background information. Silicon Valley Bank was founded in 1983 and has since become a major player in the tech startup world. The bank specializes in providing financial services to innovative companies and has helped to fund some of the biggest names in tech, including Tesla, LinkedIn, and Uber. However, in recent weeks, the bank has been in the headlines for all the wrong reasons. Along with two other major banks in the United States, Silvergate and Signature Bank, Silicon Valley Bank has failed due to a run on the bank. This happens when too many people demand too much money too quickly and the bank doesn't have enough cash on hand to meet the demand. This ultimately led to SVB's stock price plummeting on March 1st by nearly 20% after the bank announced that it had suffered significant losses due to its exposure to the Archegos capital management scandal. Archegos is a hedge fund that collapsed last year after making some bad bets on the stock market. Now, it's important to note that these banks were not insolvent, meaning they did have assets, but much of it was tied up in long-term investments such as treasury bonds. When interest rates rose quickly, the value of these bonds dropped, making it difficult for the banks to sell them without taking losses. As a result of the bank runs, many depositors were left unable to access their money, triggering a huge response from many in Silicon Valley to call for depositors to have their money guaranteed. There was a lot of debate about whether the government should step in to help, and ultimately they did. However, SVB's exposure to Archegos has really hurt the bank's reputation as a reliable financial institution. SVB's exposure to Archegos is not the only issue that the bank is facing. In February, the bank also disclosed that it had been hit by a cyber attack that had resulted in the theft of some of its clients' personal and financial information. The U.S. Treasury announced on Sunday that depositors would have access to all of their money, and the government would step in to save not only Silicon Valley Bank but also Signature Bank. They did this citing a systemic risk exception, which really boils down to the idea that they don't want people to panic and start withdrawing their money from other banks as well. However, not everyone was happy with the government's actions. Some people pointed out that once again, the government seems to be only helping a certain type of person, and that executives and shareholders may have already cashed out before the bank crashed. Overall, this situation has highlighted the importance of having strong regulatory frameworks in place to prevent bank runs and protect depositors. It's also raised questions about whether the government should step in to help when banks fail and who should be eligible for assistance. So that's the latest on the Silicon Valley Bank crash. We'll be sure to keep you updated as more information becomes available. Thanks for watching, and we'll see you in the next video.